Good morning, everyone, and welcome to the SPX Daily Plan. Let's kind of start where we are and then we'll circle back. So we're up a little bit. We closed at 15 and we're at 23-ish. Relatively tight range overnight. We poked our nose a little bit above 25 SPX equivalent and hit 30. How low did we go? And in the overnight session, looked like there was some weakness. I wasn't really kept the overnight session too closely. Looked like there was a little weakness here. I don't know what happened. Some market opened somewhere. And so here it looks like we kind of turned red for a second from yesterday's close, and now here we are. Good morning, Dennis. Okay. Let's backtrack for a second. Quick word about yesterday, because yesterday was one of those days. And there were a lot of nuances to yesterday, and I don't have the time to recreate everything here. I put out some posts, and a lot of it had to do with volatility spiking. But here, I'll walk you through it briefly. Okay, so yesterday when we opened, we kind of had some market makers short calls and market makers short gamma, whatever direction it is. Short options tends to be a magnet. We tend to pull to it. And we pulled right to it, and we stalled right out at around 55, technically a new intraday all-time high, and then kind of pulled back from there as one would expect. And then at around 10 o'clock, I guess, I don't know, I didn't see what the news was. And I saw it later, some ISM manufacturing numbers, some economic numbers, and some Fed speakers were coming out. We have Fed heads on parade all week this week. And that got the algos upset, caused a little VIX spike. And then once we broke below 45-ish, 40, there was basically nothing beneath us from a gamma point of view to keep us up. And apparently from my chartist friends, there wasn't much from a, support resistancy kind of thing to hold us up. And it was down goes Frazier. And down we went pretty much straight through, all the levels. Now, let me talk about going through the levels. Now, there were gamma levels at 57.10 and little ones at 25, whatever, as we were dropping. But as IV increases, and we're not going to go into a long explanation for that now, the distribution flattens out. What that means broadly is that, let's just say hypothetically, like yesterday, 57.05 was the biggest level that they would, that would be hedged more or less on the dime, 5 points before it. It can go 5 or 10 points through it, as it did, 5 points, and then the hedging catches up to it. That's the distribution widens, the deltas increase, volatility increases, delta expands, and that's what happens. If you want the TLDR of it, volatility increase, the lines become ranges, and they could shift downwards for a while, and then we reclaimed it as expected. Hold on, apparently I've got news about the move from Florida or move some furniture, so let me mute everybody. Let me mute myself. You guys can talk amongst yourselves. Hi, yeah, so we're trying to arrange moving stuff from Florida up to New York. And there's constant shift of plans with my son's wedding next week and visiting my daughter next week, and Rachel coming up from Florida with the moving van and getting the guy to help us. Anyway, back to where we are. And so TLDR, vol increase, you go through the levels, but they tend to reclaim and go over them. Okay, let's get back to the church of what's happening now. And so the IC whale came in yesterday. And for those of you that don't know who or what the IC whale is, the IC whale is actually a large service with a lot of followers and has a small hedge fund that sells iron condors that set the edges, tend to set the edges. And he comes in at certain times. He puts his trades in after the close. So you'll see the trades start coming in at 402, 405, 410. They come in tranches, and basically sells 5 wide credit spreads, some 10, some 5, the majority 5 wide, roughly the expected move. Trying to get about 1/3 the width of the spread credit. So on the 5 wide, he tends to be a little greedy, gets a little more, 175, 190 for 5 wide, risking, a little, not quite 1 to 3. So anyway, so here, and that's what tends to set the edges. So here we are, and his upper edge is 63.40, 67.40. The lower edge is 68, 680, and broadly those should hold. So that's that. Now we'll look at the gamma map in a minute, but basically in between 67, 15, 10, 05, kind of yesterday's low where we closed, and 25, 35 in here. I don't know why it said magnet. I gotta tell ChatGPT to change the labels to use the words I use, not to make shit up. This really should bounce. It should bounce here. This broad zone from 15 to 35 is not that well defined. Not that well defined. I give ChatGPT the levels. I said, make a TV string out of it for me. And it sometimes decides to make shit up. I don't know. I don't know. Anyway, pardon my French. I think you guys know me by now. All right, so that's the broad roadmap. We probably should have a volatility contraction-y day. Yesterday, we exceeded the expected move. We had a range expansion day. I'm expecting, more of a range pull-in kind of day. If you like to draw lines, you can kind of draw a line, like this, and here somewhere, diagonal line and diagonal line in here, and, kind of end up within here and take a breather. The turd in the woodpile, technical term, is if VIX increases. Let me see which one I have. Okay, let's go here. If VIX is over 17, that's a little spicy. But in a way, it's good that VIX is this high, because once VIX pulls back, then if VIX pulls back, not once, then we get a little bit of a volatility crunch, for lack of a better word. If it spikes up to 17.5 like it did yesterday, if it spikes up here, then it could get spicy again. However, a lot of these options were hedged out at that vol level. So it's going to take that or higher, I think, to really kind of break things again. I'm not seeing that happening. Also, briefly yesterday, the VIX 9-day difference. You can look at a ratio 0.85 to 1, 0.85, kind of being normalish, but in normal times like this, basically the difference, a 3-point difference ish is normal. 2 points is getting a little spicy. 1 point is very spicy. And so yesterday we were at, well, we're 2-point difference, which is a little spicy, and we got a little spicy. A lot of it's normed on what's been going on recently. VVIX didn't break the magic 100 number, but it kind of came off the floor at 95. And so the volatility space is kind of a little roiled. Okay, let's get a chart of SPX. And I've been doing deeper and deeper dives into, I've been doing deeper and deeper dives into volatility. I've got another post coming out maybe today or maybe a weekend post about dispersion. Because there's been a lot of noise about the SPX EQ. The volatility of the constituents of the SPX is really high. So if you take the same kind of VIX calculation and put it on each of the constituents and however they weight it, constituents being NVIDIA and this one and that one, and you look at the difference between this number and the VIX, this is a pretty big dispersion, pretty big number. And now the dispersion is rotation within that. And when it gets this close, we're not at the breaking point, but we're kind of, I think, like I calculated, the 85th percentile. So, we'd rather be like at the 50th percentile or normal or 60th. 85th percentile is spicy. But everybody knows it's spicy, and so they're hedging. A hedge market never breaks. It does go down, but it doesn't break. Anyway, I digress. So now let's go back to, here we are. And now let's pull up the OD, and then I'll let Bad Hombre talk in a minute. Oh, it's 8:45. I got plenty of time to babble. Okay, so here's what we have going on. We closed right here at 15, and we tend to close on one of these kind of strikes the next day, for the next day. And like I tell my subscribers, and look, actually was taught to me, trust your eyes are a good filter. Remember, to the right, we're going to call support resistance, with a little caveat asterisk that as it approaches one of these lines, if it's approaching a line from below, it acts as resistance, but then it pulls it back up. If it's approaching one of these lines from this way, it acts as support, but it tends to pull it back down, which is what happened yesterday. But then the math levels out toward the end of the day, and that's why we popped up. I'll toot my own horn. I nailed it yesterday. And so here we are. So what do you see here? Below 15, there's really not a lot. 05, 10, you have some stuff clustering around the 6,700 round number. So if today turns red, you got this little node, this little void here at 10. This whole zone should bounce. If IV pops, this goes away. And then we, could get into the orbit of this, the 6880, which I would expect, unless there's some crazy reaction, to hold. This was sold when IV was high. That helps. That helps. To the upside, we got this little stall at 25, where we kind of stalled in the overnight session. And if we can get over here, we can have a little path, but pretty soon we get right into the suppressive effect of this. So maybe you get to 25, 30-ish, 35, 33.892, whatever, 36.741. And then you kind of start to stall out over here. So you can have one zone, 25 to 40 could be a playground. Here to here, ping pong, or the zone we're in could be a playground, 30, 15. We have a few possible playgrounds. Then we have the playground the Bulls don't want to see, the under 67 playground. And if we enter this playground, we could bounce right back up through it and end up back here. And over the IC whale at 40. So the reason you see two market maker long is there's some 5 wide, some 10 wide. And so what happens historically, if we go through this tends to be an attractant. And so if over 40, you can get to 50, stall at 60, and then this gets sucked back in. We've seen it go through the top, and it gets sucked back in, and you get saved by 3 points at the end of the day. If we get over 60 by some miracle, then you have this other thing at 65. Then you have a whole bunch of volatility sold at 70 and higher. So we'll call 75 a bridge too far, I guess, arbitrary round number. Now, let's look at the heat map. Red are the attraction zones. Let's go here. I really should be putting in discount links for this stuff, but I haven't. Maybe one day I'll get that part a little better organized too. Let's zoom in on what matters. So we're somewhere around here. And so you see it's kind of a pinkish color. So really in here, that's saying we can kind of bounce around. Path of least resistance is up 25 and kind of following this curve up. If we break through this 40, that there's enough to break through that. And the expected move for today puts us at 45. Yesterday, when this came in, this was already within the expected move. So whatever. I'm not going to comment on him. He's got a $100 million hedge fund I don't. So what am I? 50 million, I think, assets under management, wherever it is. So I guess he's doing something right. I don't think that was a wise strike to sell. He tends to sell real close, look closer than the expected move on the call side, and a little further on the put side. I guess he's going for a credit. I don't think that's wise. And when he gets overrun, it tends to be on top, rarely on the bottom. It tends to be on top. But anyway, he's not asking for my feedback. He might be listening. I'm not sure. I always tag him in my posts. Not always, sometimes. To the downside, again, here there's really not much. If we should break, have it be red on the day, kind of skimming along near the 5,700 round number, it could end up in here. All these little zones, it's just kind of dependent. And that's basically it. Let me pull up a chart. Let me pull up E-mini and let Chewy, aka Bad Hombre, talk a little bit about the scalping room and about the course or mentorship, whatever you want to call it. And take it away, young man.
Good morning, everybody. So kind of a no man's land right here that I think we're in for ES. I think we're going to be chopping. If there might be a quick unclench move here at open, but followed by some sideways movement. If we can hold above 67.70, I'm looking for longs. Below that, I'm looking for shorts for a 10-point move. But I'm really not trying to get more than 10 to 15 points per direction until we get some structure in either way. I don't love that we came back down, that we dropped yesterday, and it looks like we're just holding structure to the upside for now. My strategy says that we should be targeting downside. I'd like to say that that's a little out of the cards, especially the yesterday's lows. I think that's out of the cards. So I'll give you guys an update intraday, just as depending on what happens at open.
Okay. And tell them about your course.
Yeah, so we've been getting a lot of feedback, doing pretty well. We have a 2-week one-on-one kind of price action boot camp. I trade using price action, and I have a proprietary indicator that I made for it. So if you're interested in that, DM me in the Discord or DM me on Twitter, X, whatever it may be. If you have any questions, we could break that out. But it is 8-day. We do the workshops after that. It's pretty good if you're kind of new and want a way to execute on the gamma levels with having, tight stops and kind of sniper entry points as well.
I'm putting the link in there to the WHOP because you could also find it there. Correct?
Yeah, absolutely. Yeah, it's the price action bootcamp option on WAP. But if you have any questions, I also do kind of like an intro call. So if you have any questions, just ping me. I'll set up a voice call with you guys and just answer any questions over the phone. It's usually easier and get to know each other at that time.
Okay, great. And this also helps people pass the prop trader test or whatever.
Yes. So for those that trade futures and are looking to trade with lower capital, prop firms are a great option, but obviously they make a ton of money from people losing money. So I'm here to kind of get you to trade within those boundaries and get you to a payout on a relatively quick basis.
I actually saw a whole few write-ups on. I mean, basically, they're looking for you to lose money. That's how they make their money. And evaluating different prop firms and where like the pitfalls are in each one and how to navigate them, whatever. It's like a whole field of landmines out there. Luckily, I've never navigated it.
Oh yeah. Anyone who tells you that prop firms make money off of their profitable traders doesn't know what they're talking about, in my opinion. Because 10% off of what their profitable trader is making is nothing.
Right. Anyway, thank you. Switching gears now, well, same gear, switching back to trading. So, as some of you may know, I put in trades in the morning for educational purposes, not investment advice, although here's some of the ones I put in yesterday. These are buy to closes from the day before. These are trades put in. So these are ones that I sold it. I sold this one at 215, whatever. I bought it at 140. These are just little trades. And here's the trades I put in yesterday at the close before the icy wheel, before I saw it, because I knew he was coming. And I set my trades beyond where he was going to put his. I knew he was going to put his. So let's go see what this is worth now. Great opposite order, 60 cents. So it's only a little bit green. Only a little bit green. Here I'm showing you, I just put his trade in out of credit that won't get filled, just so you can see it. Here's his trade. Now it's a 30 delta. That's kind of spicy to be selling. And the put is an 11 delta. So I mean, duh. That's all I can say. And he got, his credit was roughly, he's basically flat on the trade. His credit is roughly around 185. Now, in the past, he left it on till the end of the day. Lately, he's been managing a little bit. I teased him about it on Twitter. Maybe he's finally listening. Maybe lately he's been managing it and closing out legs sometime intraday, in which case, keep your eye open for that because that'll change the dynamics. Okay. That said, what would I do in the curve of what's happening? In curve of what's happening now? Siri is talking to me. Siri, be quiet. I'm already long this, so I'm not gonna sell it. But 67, 65 looks like a good one to sell. If you're in the 5 white crowd, that's not bad, or even quarter or something like that might be good. I think the expected move is 27-ish. I think that's kind of close. So, expected move takes us somewhere right around here, 45.50. The downside looks easier. What do I have here? Okay. Well, that's the IC width thing. We have decent juice to the downside. 67.60 is 60 cents. I'll take that all day. I'll even put it in another one. Similar order. 55 cents. Make sure it gets filled. Add to it. I like to look at some flies always. So let's see. To look at the flies, I like to go back to look at the shape of the profile. Game out where the flies might be. I'll often put in the beginning of the day, a put and a call fly, and they'll both typically make money because we don't typically have a trend day. And even if we do little pullbacks, just the way flies work, they tend to be forgiving. Okay. So let's look at the downside fly first. Well, I already pulled up the calls. Okay. So upside fly, we're supposed to stall at 40. We know that. So let's look at selling the stall. So now I'm going to get rid of this. I've already shown you guys what that is. Okay. above 35, not bad. Or you could go here, above 15. Kind of like that. I'm kind of willing to lose this. Although I won't, These are small trades in my IRA. I just use this to mess around. To the downside, I would sell the 15. Something is over here. 30-cent cheapie. You want to get a little room to breathe? $1.20. I'm going to do that too. So basically, I'm throwing $250 at this. That may or may not work. If I have to get back, but I'll manage it. If not, I don't mind them. I mean, I like them going worthless, but I don't mind it. Maybe move this down 5 points, really. Let me see. I think I'll move it down 5 points. Yeah, let me move it down 5 points. Either one is good, 25 or the 20, and you can do 5 wides, whatever you like. Of course, you can do whatever you want. The IC well short strike, it's here 66.80. So, if you wanted to just duck below where the action is for a 5 wide at 75 is probably okay. So broadly for option seller, selling below the short strike on either side or above on top, giving yourself whatever room, taking into account the expected move, and manage each side independently is what I do. So educational. Why do I manage each side separately? Because we get up and down throughout the day. We might get a period where we trend up, then we might stall, then we might trend down, then we might come back up. And I'm not looking for this to expire worthless. I'm looking to steal 50%, 65% of the credit on each side separately and call it a day. I call it TIT, and I tweet it out on Twitter or on Substack sometime. I want the less TIT, the better. The less time in trade, the better. The more the day drags on, the more exposed I am to gamma risk, the more exposed I am to the vagaries of the market. So I'd rather get 50% by 11 o'clock than 70% and have to sit till 3 o'clock. That's me. Or 100% and sit to the end of the day. And that's basically it. Any questions, comments, whatever? I'm going to put in some discount links. I haven't done that in a while. I suppose I should. So if you're interested in options depth, the platform that I use, here's a discount link. The other platform that I use that has broad, that has lots of tickers. Option depth is SPX, period, end of story. And VIX now. They have VIX coming out soon, which I'm excited about. MentorQ is a platform that I use for broadly for lots of different tickers. I want to get that one. And Gamma Edge is the other one, but I don't have a discount link. But if you're interested in a discount link for Gamma Edge, contact me separately and I can see if I can twist somebody's arm. pretty sure I can. Where's the mental Q link? Okay. Let me see, I have a question about butterflies. Hold on. Are butterflies viable in the last trading hour? They are more than viable. They are great. I love butterflies in the last trading hour. Yesterday, I kind of killed it on a butterfly. Of course, paper hands. I got in at 110 or 115. I got out at 225, 215. Made a little less than 100%. Had I held it, it would have been about $400, $500. So yes, they're very viable. A lot of people don't even put them on until the end of the day or try to get the end of the day pin. And I'm always playing that. And I keep on promising or threatening, depending on how you want to look at it, to do pinball live at 3:30 on YouTube and Twitter. I used to do it every day. I've just kind of fallen out of the practice, partially because just admin and in my server, talking about what's going on in the moment. I have to put my priority there. Okay, so you have mental Q, option discount link, you have WHOP link, and the WHOP link also gets you to the service on Substack, only through WHOP, the same thing. It's easier for us because then you get the Discord link and you get all that kind of thing at the same time. Everything sets up. The other way, the trading view string and all that. Otherwise, on Substack, I have to do it manually. Or me and Huey have to do it manually. I would say
you also get the trading view right out the gate with the WAP link.
Exactly. Okay, so that's where we are. It's 9:09. I'm gonna hop. Trade safe, everybody. Oh, and yesterday, a big IC came in over here. A big without IC, a big butterfly came in for Friday right here. It was about $500. It's a little red now. I kind of went with it for science. We'll see. We'll see. Targeting, obviously, a break towards 6,800. We'll see. I might always get out of a small loss, but I'm going to let it play out. Okay. Good. Yeah. I remember you texted me. So through the WHOP, it should populate, and you could always tag and DM myself or Bad Hombre. He's the one that's going to actually do the footwork. So either way. Okay, let me see. Oh, no, okay. You want to do single if I'm interested in learning spreads. Everybody learning for dummies. Yeah. Tasty Trade has good educational stuff, their videos or their PDFs or whatever. Options Alpha has one. Or really, there's so much stuff out there. You could probably Google anything about how you trade option spreads. I think I have a PDF somewhere that I wrote up. I mean, it's there's a lot of content out there. Investopedia. I don't know that one is that much better than the other. It depends on your learning style rather than the accuracy. Mentor Q has good free educational stuff online. So if you wanted me to give you one, I would say Tasty Works or Tasty Trade. I guess Tasty Works now they call themselves, or Mentor Q. They have good, solid, standard educational stuff, or Investopedia. Hopefully that helps. I've been trading spreads for so long. It's hard for me to think of the last time. It's hard for me to think of the last time that I put on a single leg options trade. I'm usually 2 legs, 3 legs, 5. I'm usually multi-leg all the time. Multi-leg, sometimes multi-time frame in the thing, but that just comes with playing with it over time. All right, I'm gonna go listen to Vol Sigs and do a little quick research. Take care, everybody.